kind of
Hi, everybody. This is David Skarica, Friday, June 2nd. So really now the newsletter will be ramped up. Some of these new things I wanted to do took longer than anticipated, is usually the case. And so June. So what we're going to do now is, for those of you who are my lifetime members or monthly members, when I really wasn't that active, I'm going to make up for both of you, to both of you, like almost I can have daily content from now to the end of August. So that's 3 months, June, July, August. There might be a week or two in the middle of July where maybe it's a few days a week because I'm going to be in Spain with my family. So, but definitely we're going to try to do this almost every day. Starting Monday, I'm going to bring back the stock chart of the day and do that probably 3 to 4 times a week minimum. Try to do it every day, but if I can, at least Monday, Wednesday, Friday, right, and maybe one on the weekend as well. So we're going to do that. So what I'm going to do too is, if for you free contributors, you'll get the stock chart of the day. Plus, I'll probably do one of these videos a week, and then you'll get more, either a video or audio or a written update if you're a lifetime member. So, and we're going to look over. So this is part one for the free people, for my lifetime members, both of you. And then part two will be just for the lifetime members. We'll go into some individual stocks and trades. But this one, I'm just going to look at the macro markets. We're seeing the market up again, highest level actually in about a year. And we're going to take a look at that. And there's interesting aspects of the market. Like maybe the market will go higher, maybe it'll go lower. It could peak out. The VIX is under 15, which we'll show in a second. But what I really want to show, we're going to share, is that what's interesting about this rally, it's very thin in nature. So this is the advanced decline line on the NASDAQ. And you can see, like, this is going back 10 years. Let's go back even like longer, 14 years, to really the bottom of the market in 2009. And you can see, so there are times where, just because this is lagging a bit, like it lagged in 2012, and then, the market did fantastic still for the next few years. But what's kind of interesting about the advanced decline line is look how weak it's been, on this rally. It's really just those big cap tech stocks, the Microsofts, the Apples, the Nvidias, the Teslas. Facebook has come off strongly from its lows. Like, those stocks have really driven this rally. And I think actually Microsoft and Apple, as a percentage of the S&P, are now at the highest level they've ever been. Even during the 2000 .com bubble or the 2021 bubble, they were not as high. So it just tells you it's concentrated in a few stocks. And then now, AI is kind of taking over as the new fad. Momentum market. For those who lifetime members, I do have a really nice AI small cap stock, which I like, which I will present to you next week. If someone wants to become a lifetime member because you want an opportunity like that, just write me at addictedtoprofits@hotmail.com, and I'll give you the information. I'm still going to do a lifetime membership, can still be had for $1,200 US, or which is about 50% off the regular price. The regular price is over 50%, is $2,500 US. So anybody who is interested in that, and the subscription is roughly $800 a year. So really, you're only paying, like, I think actually $840 a year. So you're really only paying $350 extra, to get a lifetime sub. So anyhow, that's what I'm doing. Anyhow, I just wanted to show you this. So it's really driven. Of course, Nvidia went gangbusters. I have to admit, I still have a very tiny NVDS position. It's much smaller than it was last year. But Nvidia has a history to do this in the 2000 to 2002 bear market. Nvidia actually hit a high in 2002, where obviously most stocks hit a high in 2000. So it has a history of kind of doing this, in these in these bull markets. But their last earnings, they blew it up. They had, they hyped up AI. And right now, anyone talking about AI, it's like blockchain a few years ago, or .com back in 2000, or telecom back in 2000. Anyone talking AI is just getting their stocks to move. Like a lot of one of the telltale signs is always what's going on in that little town of Vancouver up in Canada. When the mining guys start getting into .com like they did, or getting into uranium like they did in 2006, or getting into blockchain, and now they're getting into AI, that's usually a sign we're into some kind of bubble. But because the market has remained relatively strong, because we're at a new high at this move, even if the market were to peak out after today, and beginning to roll over, I think like it's going to take a while at this point because, you're talking the S&P is up, 500 points from its actually 700 points from its lows and just 500 points of its December low. So it would take a while for this to roll over, and it probably wouldn't really start rolling over into until the fall, right? So that's basically what we're looking at here. And of course, this means that now today the the volatility is dried up. The VIX is now at the lowest level you can see since 2021. Now, that doesn't mean that the market's going to top too, because if you remember in 2021, the market actually topped here in December. So, but probably it means in the short term, there isn't much more downside. So if you wanted to do something like calls on the VIX, go long volatility, probably an excellent idea here. But again, I don't know if we go right back to 35, we would probably have something like happen in 2021 where you get these little spikes into the mid 20s, right? But it's a pretty low, risk thing here. But the problem when you're at these low levels in a bull market or in a rally, it can sit there for weeks and weeks and weeks or months and months and months. So that's all we have to know. So, that's what we'll look at. So we'll also look at Microsoft. You can see how strong this has been. Yeah, like straight up in Microsoft. I think, yeah, it's almost back to its highs here. And this is why I've gotten out of the way a lot of the shorts. Like I said, I still had a small position in NVDS, which obviously went down. I should have gotten rid of all my NVIDIA short when when Jim Cramer said he was going short at 130. By the way, now Cramer says NVIDIA is the only stock to own. So probably tells you what you should be doing right now as well. So anyhow, Microsoft, I think Apple is near new highs. And a lot of these are seeing no revenue growth. Apple's back to the highs here. So I kind of got out of the way of all of these on the short side. Tesla, is at a new high for the move here. Like Tesla actually looks like, you have to be blunt here. Tesla looks like it could break out here. If you break, I might even do some out of the money calls on Tesla if it can break this 218. Maybe it goes back to 300 or something like that, especially if we're kind of quiet in the markets and individual stocks can keep kind of moving on their own here, that sort of thing. So, the autos, Ford, that's, who knows, this is a sideways chart. Could Ford break out here? And, I'm not going to talk about individual stocks, like I said, but it definitely looks like, I'm not going to go bullish gun ho. One thing I've done in my newsletter for the paying subscribers is I've outlined, they're just kind of sitting there, but I've outlined like 4 or 5 kind of stocks that are completely beaten up, like off 95 to 99% off their highs. And I kind of like the look at these stocks, and we can look at them here. And maybe like a trade you can make here right now, oil and gas stocks gotten very cheap. Oil went below 70, and we can kind of see the XOI near the low of its range here. So maybe buying, a Suncor or an Exxon or a Chevron and using the, 1575 on the XOI, which is only about 4 or 5% lower as your stop loss, is good here too, because if the market does hold up, and remember, oil and gas is longer term. Now the supply is really shaping up. Like the number of rigs in the United States is about 35% off its pre-COVID highs, which is all-time highs. So we're not, even when oil went back over 100, we never saw that build up back in rigs. And part of the reason is this regional banking crisis. A lot of those loans that went into fracking came from smaller regional banks. Now with them kind of like tightening their belts, they're not going to loan out as much for fracking, and then, oil obviously being at $70. And then obviously too, everyone's kind of going to this green movement. So that hurts the investment in oil and gas. Even Exxon and Chevron are moving into things like hydrogen and really not doing a huge amount of oil and gas. So I think that what happens ultimately is you see this could take a number of years now. And then is there a recession in the global economy before that, which could whack oil and gas, back to 40 or 50, or does it just start to pick up? Because you're going to see at some point less supply come on the market. We're not moving away from oil and gas anytime soon. And when that supply comes off the market, we'll do that. One stock I will talk about, and I still don't have a position on, I've been waiting patiently, it's a very cheap stock, is Suncor, the Canadian company. And the thing I like about these Canadian oil sand plays in Alberta is, number one, a conservative government was just reelected there. I don't get into politics too much, but it's much more oil and gas friendly than the left-wing NDP. And by the way, the funny thing about that election is they did have an NDP in government recently, a few years ago in Alberta, and they were pretty more to the center because Alberta tends to be more to the right than the rest of the provinces, in Canada. But one thing I found kind of funny and ironic was that so they were still pro oil and gas and that sort of thing. This NDP government, they were winning the polls because people were still upset the way COVID was handled, all this sort of thing in Alberta. And then the polls switched. The Conservatives ended up winning by about 8 points. And the reason those polls switched was because the NDP ran a bunch of anti-oil and gas, kind of green, members, which is ridiculous in a place like Alberta, which is, that's Alberta is the Texas of Canada, that runs it. So I don't like to talk about politics too much, but it was just kind of funny. But the reason I like it is that if the Republicans are to win, for example, in 2024, take over the presidency plus the Senate plus the Congress, probably the Keystone Pipeline will be approved. And then you have more capacity for these oil and gas plays with a pro oil and gas government in place in Alberta. So it really sets it up. And I think one reason that these stocks are still at big discounts, you can see Suncor has come off a lot from its lows, but Suncor still trades at something like 6 times earnings and pays a near 6% dividend. So I think that that's kind of what you're seeing here. And of course, with the Canadian dollar kind of weak, remember, again, I understand they do get a discount to the kind of that heavy oil and gas they do have, in Canada, right? But Suncor is, selling their oil and gas probably close to, 100 Canadian a barrel, or even with that discount, 90 Canadian a barrel, because the Canadian dollar has fallen back into the low to mid 70s. So yeah, anyhow, so we were seeing this big update on this kind of employment report. It came in stronger than expected. And like I said, one reason I've been so quiet isn't just, the new things I'm planning here for the newsletter, which I'll talk about, going forward. I'm not going to do it in today's newsletter, but it's just, I just had this feeling. I'm like, there's nothing going on here. Maybe I should have went more along the market. But the thing about me is I'm such a contrarian. I'm not going to sit there and just buy Microsoft. And I'm value investor. They're not cheap, so I wanted to buy these kind of turnaround plays, and the turnaround plays are more difficult because the companies do have fundamental problems. They need to quote unquote turn it around. That's why the turnaround plays, and you might have to wait months and months and months. Out of the 4 that I've picked, one looks like it is starting to turn around. It rallied 70% or 80% in a few weeks, and now it's kind of come off. Anyhow, but again, that's for paying members, which we'll talk about then. So anyhow. That's kind of what we're looking at here. If we want to just quickly look at gold, GLD, gold is down today on those strong employment reports. You can see gold's down over 1%, but still near the higher end of its range. Does gold kind of continue? If you look at the GLD, we look at the GLD because the gold chart on, you can see we're right up here. So the question is, do we move back down to 1900 before we break out? I think at some point, especially over the second half of the year, when we start getting closer to the Fed loosening again, we will see gold break out. But my question is, when does it break out? And I can tell you that the junior mining sector, with me actively being involved, is totally dead right now, completely dead. Even with, silver's, hanging in there above 23, gold's, gold at 1900, 2000 is a good price for exploration and mine and, drilling and producing. But the market just doesn't seem to care right now. And I have a lot of good junior companies, which I'm going to talk about in some future videos next week, that are like, they're down 40, 50%, and they're still excellent values. So anyhow, so you can see, these are kind of like, both gold and silver are kind of in the ranges, upper part of the ranges, but just kind of like sitting there right now, So, but like, again, first of all, I don't get these employment reports because everything from new job openings to layoffs are saying that the job market is slowing down, but it's not showing up in these job numbers. So, the job numbers, you always never know how the government massages and the whatnot. So I guess really that's about it right now. Right now, I am kind of a holding pattern. I do have to say with the S&P, just from a pure technical standpoint, even with the VIX, that low, let's see how it reacts now with the VIX this low. But we go look at here. I would have to say if you get over this 43.50 area or so, That does look pretty good. And look, not every bear market or recession has to be like a 2001, 2, or 2008. It doesn't have to be this huge decline and crash. And, so, like this could be like 1968 to 70 or 1966 or 1990. We could have just seen, a 9 or 10 month bear market, the market falling 25, percent. And then maybe this is like the 66 to 68 rally. I don't know. Like I'm not sitting here telling people that I'm a genius when it comes to these things, So, but the thing about that is you always have to be flexible and then look for opportunities. Well, again, some of the stocks that I think I found that are cheap that I think are turnaround plays, if we are in a rally that can say, last into the election next year, then I think, these kind of turnaround plays, if they turn around, can go up 500 or 1,000%, not just 20 or 30%, like most stocks will rally. So I'm just going to leave it at that for now. And that, by the way, that's what I'm just doing right now. Right now, I'm just trying to outline like a stock we were short is Crocs. I just put out a thing to sell the puts today. And if you want to cover it here, we probably started shorting that around 125. It's about 107 today. So it's like, some of these, I'm just looking for a stock here and there to short, go some longs, and really, and being patient, because the market either way, it's kind of boring to me right now. It's not going to see these rip roaring gains, in my opinion, even if we are in a mini bull market. And even if we're going to top out, it's going to take a long while for this to top out. So we see the TLT here. It's down a little bit today. Like bonds have just kind of going sideways as well. And did bonds bottom on this cyclical move last year? Now, secular, I think we're in a long-term bond bear market that's going to last 10 or 15 years. But cyclically, did we bottom? That's a question we all have to ask ourselves as well. A trade I still like on the short side is the LQDE. It's come off the lows. That's the corporate bond market, because I think corporate bonds will still be affected if rates go higher and if the economy continues to weaken. So anyhow, I'm going to leave it at that. And of course, all these other things like the inverted yield curve, let's look at the, like the 2-year bond, it has come up back pretty good though, so you can see, but it went down. And even right now though, we're over 5% on the Fed funds. This is still at a pretty big discount to the Fed funds. And usually the 2-year bond tends to track the Fed funds, and it did it. When the Fed funds was going to go to 5%, it predicted that in March, and then it's kind of come off. So the question is, does this predict, like this one right now would predict that the Fed is going to cut 50 to 75 basis points from the current levels. And if we go look at the CME market, what the Fed is going to do in 12 days, there's like a 50-50 chance, or sorry, 70-30 chance they're going to do nothing. And a lot of the Fed members have said this, that they may do it. And you can see here, there's about a 70% chance that they'll raise in, because this is one, that would be 2. So there's a 51% chance of 25. So basically it means a 70% chance of another rate hike in July. So that could be it. If we go to the end of the year now, December, you can see, look at this. Now it's basically over 50% chance that maybe, or like a 70% chance that maybe they'll take back that July rate hike, but that's really about it. There's only a 40% chance they'll take back 50 basis points, and a 10% chance that they'll take back, 75 basis points. So that those rate cuts are looking less and less likely as we go on. I do think at some point that's got to hit the economy, got to hit housing, but there's other factors in housing. There's not the oversupply like there was in 2006, et cetera, et cetera. And I'm sure most of you, wherever you live, have seen that housing had that initial decline last year, and maybe it's come like say housing declined 20% in most areas, and then maybe now it's taken back like half those gains, so half those losses. So say average house price, just to make it easy, was 500 grand in an area. It's gone to 400. Now it's back to 450. And remember, the new buyers, they're not addicted to that cheap money, right? The new buyers are like, are accepting the fact, oh yeah, I got to pay 6 or 7% on my mortgage, right? So anyway, I think I'll leave it at that. And then for the paying members, there will be another a video with the stock picks.